Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host, Nam Phan of Pacific Private Money. Mark Hanf is off today. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. And that certificate's not sponsored by the radio station, but by Tan Bella Tanning Salon, with 2 locations in San Francisco and 1 in Marin. Today's trivia theme, again, is miscellaneous trivia. Our special guest is investment advisor Ken Winans, and I got to give a little intro here. Ken is the guy who got me into radio all the way back in 2009.
Yeah,
really?
That is true. Wow. He had a show on KNBR called The Money Scorecard.
That was fun.
A guest, and then after that said, "Hey, Edward, I get kind of busy. Would you mind like helping out co-hosting here?" And I said, "I'd love to." And from there, it just took off.
So both of you must be equally interested in investments and sports. Is that?
Well, that's just strictly the business one.
Yeah.
Specifically. Okay. But actually, Ken, you were quite a skier, if I remember.
I did. I was a competitive skier. I ran track and field in college. But it is funny that we talk about sports, because I just find it funny that a lot of the teams that were in the Bay Area when you and I started doing radio are no longer in the Bay Area. So isn't that kind of interesting?
Yeah. Hey, so before we get off of sports, what about the Giants and Dodgers coming up? That's going to be a series for the ages, won't it?
Oh, well, and it's so funny for me now because I have family in Southern California and I live up here, and I just love to poke the bear on that thing. Yeah, they always say they're so lucky. There's no named players. I say, well, call it what you want, but they cinched their pennant. So yeah. Be quiet. Hush and move on.
All right, Ken, I look at you as quite a mover and shaker, and you just came back from Washington, D.C.
You know, it's funny that so a little bit of what I'm looking at. I think it's the only people who seem to be denying it are the people in Sacramento. People are considering their options on relocating their residence, not necessarily moving, but changing their residence to states that are more tax friendly. I'm doing the same thing with Nevada. I'm looking at it. By the way, it's not Nevada, it's Nevada. So you need to make sure it's when in Rome. But so anyway, I have an office in Las Vegas, and I was invited by the Vegas Chamber of Commerce to join a delegation of business people back to Washington. And there were some big hitters there. There were people representing Steve Wynn, the Raiders, that were part of this. And so I haven't been to Washington in a number of years, and it was interesting to be there during the whole COVID environment. Oh, and by the way, if you were not vaccinated, it was kind of like, don't even bother going, because you had to show your vaccination card everywhere I went, every building. They really are taking this stuff serious. So,
well, hold on a minute. They're taking it serious, except the White House staff doesn't have to be vaccinated, and a lot of other federal government agencies. You got to get it, but for us, no, not so much. Right?
I'm just telling you, man. They made it rough on anybody who was not vaxxed. I mean, I saw them get their thing jammed up their nose every morning. It was pretty ridiculous. But anyway, being back there. So number one, it was very quiet there. I mean, there were springtime, Washington D.C. Edward, your daughter went to school back there. It's beautiful. It's gorgeous. Everybody. I was shocked to see you could get into restaurants very easily. You could get into the museums very easily. So anyway, just as a note that it was, still this idea of we're getting back to normal, I didn't see it. Okay, but now the politicians. It was very interesting because I met both the Nevada State or the Nevada senators, most of the Congress people, and it was so wonderful that these people were very pro-business. Democrat, Republican, didn't matter. They were, what can we do to help you employers? What can we do? What are your needs? A lot about the infrastructure bill, what's going to be coming directly to Nevada. A lot of talk about desalination plants, water. They're very serious about stuff.
Wow.
And I found it interesting that when I try to make appointments to see certain of our elected officials in Washington, I found that COVID was an excuse why they couldn't meet. So just very different. So what I will tell you guys is that I did bring up, as you both know, I'm an economist by training. I've written history books, and I brought up about that the policies in Washington are inflationary. And I asked point blank when we were talking with these people, I said, do you guys understand that you've put us on I know that Jay Powell at the Federal Reserve thinks this is temporary. I am of the opinion that history is going to prove me right, that this is not temporary. when you produce too much liquidity for too few goods and services, you have inflation, according to Milton Friedman. I believe in that definition. And I asked them point blank, I said, do you guys really believe in this temporary inflation? And they asked me, one congressman said, Ken, do you want the political answer or the truth?
Yeah,
I said, the truth. He says, no. He says, look, I've been in Washington a long time. I agree with you. He says, look, I'm not you. I don't have your resume, but I agree with you. We've got sustained inflation. I said, but Congressman, do you understand? And I said, I'm just backing into it. You're talking to a room full of business people where we have to be careful of how much debt we take on. You know, and you guys are you guys talk about trillions the way you used to talk about billions. And you guys are now, you think you have budgetary problems now. What is going to happen when interest rates go back to just a 30-year average? When Treasury bonds, which are about 200 basis points higher than they are today.
Yeah. Anyway, continue on in just a minute. We're going to cut to our first commercial break. We're on kind of hard breaks here. Okay. Our first trivia question is, and you know the rules, Ken, don't answer until afterward. I got some.
I'm going to shut up. It's Nom's turn.
Okay.
I'll give it a shot.
Facebook was originally developed as a social tool for students at which university? That's our trivia question. All right. Call 888-912-1190. First caller with the correct answer is going to win that tanning certificate, which is worth over $100. All right. Stay with us. You're listening to The Best of Investing. Don't touch that dial. We'll be right back. Welcome back to The Best of Investing. Again, I'm Edward Brown, your host, along with Nam Von of Pacific Private Money, our special guest, Ken Winans. First trivia question. Facebook was originally developed as a social tool for students at which university?
Wasn't it Chico State?
Harvard.
Harvard, that is correct. Our guest.
By the way, Zuckerberg did not graduate from.
Yeah, that's right, exactly. Hey, I want to make a quick mention here for the Tahoe Lakeshore Lodge and Spa, which provides guests with an all lakefront hotel in South Lake Tahoe, where every lodge room and condominium has a view of the lake and mountains. Guests can relax or play on over 500 feet of private beach. Check them out at www.tahoelakeshorelodge.com. All right, Ken, continue on with inflation.
Yeah. I mean, hey, listen, I'll tell you guys something, because, you know, I also do ABC radio and I also write for Forbes. And Edward always says I can be a little unplugged on the show, unlike other PC-oriented shows. So I've often been telling people that, I mean, we're old enough, Edward, you and I especially are old enough to remember the 70s. And I remember my dad, my family were, you know, from the East Coast. I remember as a kid going back to New York City. And I remember going down Fifth Avenue when I was a kid and seeing all these mini skirts and high boots. And I don't know, I'm maybe 8 or 9 years old, but I remember how tall all these, and so I tell everybody, we're going back into the 70s without the really nice fashions and without the good dance music and the discotheques. With COVID, we can't do anything. So unfortunately, that's the world we're in. But when I was telling about the politicians and I bring up inflation, and you bring up, your guys are spending money you don't have. You're indebting us, and you haven't thought about when the butcher's bill comes due, when you guys have to refinance all this debt. We in business know this. What's going to happen when your interest charges go up? They're not going to be able to afford to pay it. They don't know who's going to pay it.
They're going to put more gasoline in the engine and just print out more money.
Yeah, but at some point, that's how empires die. I mean, that's how Rome died. That's how the British were nuked. I mean, but they don't seem to understand that, and I just find it perplexing.
Well, it seems like what some of these countries do is they'll just take a few zeros off the end of the currency,
and then they say we're back in business.
Yeah, exactly.
Which, you know, by the way, if you guys haven't read it. My last article in Forbes, you might, and I'd encourage the audience to read it. It's on Forbes.com, no charge to read. It's called The A, B's, and C's of High Inflation. I would encourage you guys to read it because it was interesting that I went back and looked at it historically. And the things that we have going on today, which is, you know, back then we came off of Vietnam, lost that war, as it appears we lost Afghanistan. So you lose a war. Government was flooding the economy with money. Then you had an earth-shattering event that shut everything down. Back then it was the Arab oil embargoes, the two of them. This was COVID. Then you had, you know, back then we went off the gold standard, so the dollar had competition. Well, today we have crypto. So it's just eerie how we have these comparisons, and people say, oh, that's not a fair comparison. And I said, well, it is.
It is.
And if you go back and look at, the good news is, Real estate typically does well in that environment. Commodities do well in that environment, as they are now, until rates start going up. And so I think that that's the one thing I've been trying to tell people is that, look, you know, we've had unusually low interest rates on everything for a long time, whether it's margin on stocks, mortgages on housing.
Yeah.
But at some point, it can't stay there forever, and it's going to have to go back to a normal level. So I've just been trying to tell people, you know, look, you know, do your financings while you can now, but at some point, you're going to have to wake up and face the music on this stuff.
So Ken, so for like when you said real estate, when interest rates go up, is it more because people are just not going to be able to pay for those higher mortgage
They
rates?
won't be able to qualify for a mortgage. I mean, well, but and Edward, I'd like to think we're smarter than we were in 2006 and 7 and smarter than we were in the late 70s, but I'm not sure we are.
Well, there are regulations. Of course, they could always ease those regulations with Dodd-Frank. You know, they could change the rules on that, but you do have to have ability to repay now, which you didn't really have to have back then. But just to give the audience a little background on Ken, if I remember correctly, didn't you used to provide information for like Fidelity Investments in Princeton University? So they wanted research, they would actually go to you, if I remember.
I actually love it. Morningstar's database. So Morningstar, the big rating agency, they added. So my firm is also a research firm in addition to being an investment management firm. And I basically created two indices. One is real estate. We have the only housing index that goes back to, and I'm not kidding, 1830.
Wow.
Yeah. So, you know, and believe me, it took a long time. I had to go through all these old studies, these academic studies, and I had to come up with an algorithm to put it all together and all that. So Morningstar was trying to find an index that didn't have a 60-day lag. Case Shiller, I always love when they posted 60 days ago, this is what real estate was doing. It's kind of like, really, who cares?
Yeah.
60 days ago, who gives a crap?
Yeah.
But ours it only has a 21-day lag. It's off of new home prices. So it's not as extensive as existing, but I think new housing is still a very good sampling of what's going on in housing. Mm-hmm. And then I have a preferred stock index that is a type of security that pays high dividends, but both of them are on Morningstar's database, which I'm thrilled. They came to me and asked me if they could add it to their database. But so the point being that when I do go back and look at what happened to housing in the 70s, you know, again, it had that initial wonderful surge up. But when interest rates started climbing, you did see that, you know, like everything, housing prices had gotten overpriced. Housing came back down to reflect the cost of borrowing. And also, there's been a lot of studies done that multi-million or very, you know, high-end housing, very high-end properties are actually, as you guys know better than I do, you know, those people typically don't need mortgages to buy a $10 million house. But it is very highly correlated to movements in the stock market. So if interest rates go up, stocks will start having issues. Some of those people will probably say, ouch, I've taken a hit in my deferred comp program at work, or ouch, my 401k is taking a hit, and they will probably hold up. The point being, at some point, everything has to slow down in order to get inflation under control. Mm-hmm. Going back to what I said earlier, I'm just astounded that the people in Washington it is not important right now. There's no thought of what's going to happen when rates go up.
Well, as we say in the past is actually current today too, is the definition of, the job description for a politician is to get reelected. That's all they care about. Okay, we're going to get to our second commercial trivia question here. What two pieces are moved in chess to execute a castling maneuver? So to castle, they call it, you say, I'm going to castle, as they say. Call 888-912-1190. First caller with the correct answer is going to win that tanning certificate. What two pieces are moved in chess to execute a castling maneuver? And by the way, I want to make a quick mention here for Palio restaurant in San Francisco. It's been serving San Francisco since 1990, and it's no surprise that it's been voted best Italian restaurant in SF Weekly this year. Consistently been voted one of the best restaurants in San Francisco by San Francisco locals. Open Monday through Saturday. Check them out. Reservations are required. Visit Palio, PALIOSF.com. Stay with us. Best of Investing. I'll be right back. Welcome back to the Best of Investing. One more time, I'm Edward Brown, your host, along with Ken Winans and Nam Phan. What two pieces are moved in chess to execute a castling maneuver? Gentlemen?
Nice. Rook, bishop.
Close. King and rook.
Ooh.
Well, king makes sense. So in the last segment, Ken, you were talking about your trip to Washington, and one of the things you mentioned as sort of parallels what happened back in the 70s. You were talking about crypto, and what's going on in the crypto space. I mean, I'd love to get your take on what you think of it. I mean, 2 years ago, I think we had a conversation or segment on the show where we talked about Bitcoin, and we were bashing it. And since then, it's staged itself. It's gone up significantly. I can't even remember what it was back then, but we didn't really just thought it was just gambling. Whether or not the underlying blockchain technology is legitimate, I think there's some value to that. But specifically Bitcoin or cryptocurrency in general, I'd love to get your take.
And I don't understand, how do you mine these things? Because if I mine it, don't I take it from somebody else? That's what I don't understand. But go ahead, Ken.
Well, and first off, Nam, I agree with you. I did some studying. Forbes asked me to do a piece on crypto a while ago, and I think the blockchain technology, I actually think, and you guys might agree with me on this, if there is an area of finance and investments that needs to be modernized, it's the whole transaction process with real estate. I mean, it's downright Byzantine how we have to go through title insurance, and you guys know better than I do what has to go through this process. It's mind-numbing. So I think that down the road, it could really transform real estate in a positive way. All right, but here's the thing. My firm, we are a fiduciary. It means that, we're held to the standard of we have to put the client first. And so like you guys, I've been asked about crypto hundreds of times. And I just say, well, look, number one, that until it is insured by FDIC insurance, if it is held in a bank, or SIPC industry insurance held in a brokerage account, I cannot consider it anything but speculative, because you do not have protection. If you have a crypto wallet and you have an account at Charles Schwab, and Schwab I'm just using them as hypothetical, of course, and they have a wallet on their website, and you go in one morning and your $300,000 in crypto is gone. If you had SIPC insurance, you have someone to go to and say, hey, I was robbed. If your stocks or your bonds or your commodity contracts are stolen, you're protected. And as you guys probably remember, in 2008, we were concerned about, my gosh, are those Lehman Brothers accounts secure? Are those Mero? And they were. Civic protected those accounts. So you don't have any of those kind of protections. Okay, so now we get into crypto. I have a background in commodities. I've traded foreign currencies in the futures markets. I've traded other things. And I've told people, look, I'm not against, if you want some alternative investments. I mean, Pacific Private Money is a good example. I mean, there's places that by all means you should have it. I think commodities, if you're in an inflationary environment, like I've stated that I am, I think people should consider having commodities in their allocations, meaning, but I'm talking about cocoa, corn, soybeans, gold, and if you want to, and if you are concerned that the dollar is going to lose value as it did in the 70s when it went off the gold standard, then fine. But why not have, in addition to crypto, yen, euro, yuan, have a basket of other currencies to mitigate that? Because if the dollar goes down, they're going to go up. Mm-hmm. So have crypto in that. But I agree with Nam when he said that there's a speculative mindset to it. And I personally always get real concerned with what becomes popular with new investors, like .com stocks in 1999, or people who thought they were housing experts that were buying houses they couldn't afford and they lost it all. I just get concerned. It's too new. Me personally, when people say, well, look at all this money I made in crypto, and I said, well, I can show you people who made 2,000% trading cocoa. I didn't see you guys hammering down on cocoa futures. So I just am concerned. I think it's too new. And personally, people in my industry, I think until it's protected with insurance, I'm not going to be actively promoting it. How do you guys feel? I mean, you're in the.
I think I could personally move the cocoa market because I like hot chocolate so much. But, crypto I can't eat. So there you go for that.
You like chocolate donuts too, Edward.
Yeah, please don't mention that. You're teasing me already.
Just one other quick thing. I mean, there's been a lot of stories coming out about, like at Coinbank, and I mean, I've been reading them as you guys have been, where money just seems to be disappearing, and that just scares the heck out of me.
Oh,
the
that's
idea
right.
of going-
Yeah.
I mean, almost like a pyramid scheme. If I'm going to do a pyramid scheme, I'm going to invent it. I'm not going to come in at the end. You know,
Yeah.
I'll be the top guy and start kind of fully. You know, I'm not.
You know,
I'm just.
But I have to tell you guys, it's funny because I'm always because in my career I've been in the game a long time, and I've always heard about the Ponzi scheme people, and I'm always told, oh, you just don't understand this. This is new, and you old guys don't get it. And I hear that. I remember you guys know there was a Ponzi scheme in Nevada.
Yeah.
What was it? $300 million Ponzi scheme. I knew one of those guys, and I was hearing the same. Oh, you just don't understand our business. And I said, well, I can add numbers.
Yeah.
These numbers don't add up. And so, Edward, you brought up about the mining and all that stuff. Yeah. I'm not a technology expert, but I do find it funny that people who I know who work for a lot of these big tech firms, and I ask them, how much of your own money do you have in crypto? Well, I got $500,000. Yeah, you got $500,000, but you're worth 10 million. That's hardly convincing to me.
Yeah. Interesting. I think the underlying blockchain technology is here to stay. And I agree with what you're saying in that you can make the real estate transaction and even the finance piece of it much more efficient if you use blockchain correctly. And I see some companies now that are in the space, in the finance space or decentralized finance that I think are building kind of the roadmap for real use cases for blockchain. But Bitcoin, it's driven on speculation, and so it could go down. It's running up right now back to close to 55,000.
Yeah.
But it could drop just as easily like it did earlier this year.
But also, you can't really do, at least with the yen or something, you can actually cash in yen, go to Japan and spend it. Crypto is just kind of this ethereal thing.
Well, I just, guys, I mean, I get, like I said, I'm a little old school about this. I get the stocks that I buy, I rarely buy companies of celebrity CEOs. They make me very nervous because they're more worried about their persona in many cases than they are about running their company. I love the company where I could go down to a local place in downtown Marin, anywhere in down, and the person could walk in and we would know who they were. I like those kind of companies.
Gotcha. All right. Hey guys, cutting to the third commercial trivia question break here. What word describes a cut of steak containing both the T-bone and the tenderloin? Right? What do they call that cut of steak? All right. 888-912-1190. First caller with the correct answer is going to win the tanning certificate. Stay with us. Best of Investing. We'll be right back. Welcome back to the Best of Investing. Edward Brown, Ken Winans, and Nam Phan here. What word describes a cut of steak containing both the T-bone and the tenderloin? What do they call that cut of steak?
I'm not a steak person.
You're not a steak person?
Okay, I'm going to take a wild guess here, Edward.
Yes.
Ribeye?
No, it's actually the porterhouse.
Oh,
porterhouse.
Yeah, and if you ever buy a steak, buy a porterhouse, you get the two best pieces and then just split it with someone. Okay. Nam, we have an email that comes in from a listener. It says, you have said often that you get leads from other mortgage brokers. Why would they recommend your company?
So why would they recommend Pacific Private Money, and what does Pacific Private Money even do? So, we're an alternative lender or private money lender, also called hard money lender in the days of old. But essentially, we provide capital to people who are buying a piece of real estate, whether it's their personal residence or maybe a home that they're going to fix and hold and rent out, or fix and flip. And so we occupy sort of a segment of lending that you wouldn't get that kind of loan at Bank of America or Wells Fargo or any conventional lender. And so the email question relates to why would a conventional lender, essentially, or a mortgage broker, somebody who arranges mortgages representing multiple banks, send somebody to Pacific Private Money? Well, number one is probably because it's a loan situation or scenario that they can't do. And a few examples of the types of loans that we do, that we specialize in, that banks don't specialize in, are bridge loans. So a bridge loan for us is a loan where we are providing the financing for a home that somebody's purchasing but they still haven't sold their current home yet, their departing residence. And it's very common, especially right now. We were talking about real estate at the first few segments and how high the prices have gone. it's super competitive out there right now. I mean, we have so many people come to us directly, the consumer, or through a mortgage broker, like the email question asks, or a real estate agent, because they say, you know what, I'm trying to make an offer on a home, and I have a home to sell, and so I'm losing out because I'm writing in a sale contingent offer, and I'm competing against 10 other offers, 3 of which are all cash. Well, if you put on the seller hat here and you're entertaining 10 offers and 3 of them are all cash, why is that attractive? It's because, geez, I don't have to worry about this borrower's bank loan falling through.
Yeah.
So I'm going to take the cash in hand. And so those 3 offers are usually, the 3 cash offers are usually the ones that get looked at first. And the only ones that are really in competition for that purchase. Our bridge loan actually helps because it allows that home buyer to make an offer without a sale contingency, the one who's who has a home or needs to go on the market. And so that's getting referred to us. Those types of borrowers, scenarios are being referred to us by banks, by mortgage brokers, because number one, they're not going to do a bridge loan. However, they will do the takeout. So essentially, we provide the bridge loan so that we can help them buy that next home. They're in that loan really for a short period of time, essentially until they sell their departing residence, and they take the cash or the proceeds to pay us off, pay us down, or use it towards the combination with a refinance with their conventional lender. And so we're essentially plan B, where a solution for those people who are trying to get that next home. And we're an ally to not only the mortgage broker, because he or she will get the takeout loan, they'll get the refinance opportunity. And we're an ally to the real estate agent as well, because we're helping save a transaction or create that transaction. And if anything, realtors should know this, is that it helps actually create inventory, because there are so many homeowners today with a ton of equity in their home. And there's this fear that I know I can sell my home, but I don't know where I'm going to move to. And the fear of, hey, if I sell my home, I might have to rent back, the property, or go get into a rental somewhere until the next, until I find my the home I want to purchase. Many homeowners don't realize that they can actually buy their next home first, and then they have the flexibility and time to, sell their departing residence without the pressure of, concurrent escrows, or, certainly the pressure of having to move.
Okay, how do people get a hold of you? And then I want to move back to Ken for a minute.
Yeah. They can get a hold of me by calling us at 415-883-2150, or go to our website, www.pacificprivatemoney.com.
Okay. And Ken, I want to go back to you for just a minute. Before I forget, how do people get a hold of you if they have questions?
Well, sure. And let me just say this real quick, and credit Nam, another thing that you know very well. We know there's a record level of divorces right now because of COVID. And you guys know it's virtually impossible in the midst of a divorce for somebody to buy a piece of real estate unless someone's going to sign a quick claim deed, and you can't do it.
Yeah.
I mean, right there is a prime example of where a firm like yours helps somebody who's trying to secure a home while they're trying to get their divorce finalized. It's fantastic, because no conventional mortgage company will touch that. They say, sorry, not in California, we're not going to touch that. So,
yeah, you're right. We do quite a few loans to divorce situations, and it's unfortunate, like you're saying, the record number that we're seeing this over this last year and a half. But if we can help in that situation, then give us a call.
Yeah, absolutely. So Edward, in my case, we're a registered investment advisor, and knock on wood, we're one of the few people in the Bay Area who actually have top ranked Morningstar rankings. So, and let me tell you something, dealing with Morningstar is like getting an Academy Award. I mean, we're all nervous every quarter waiting for those results to come out. And I mean, God help you if you have a bad quarter, they just hammer you. But anyway, I would recommend people who are looking at, advisors who build customized portfolios, who need something more than the off-the-shelf type stuff they can get at a bank or an investor, should give us a call. Our number is 800-4-WINANS, WINANS, or go on our website, winansinvestments.com. And certainly you can read about our performance and the kind of services we do. And we do We don't hold the money. The money is held at the big custodial firms like TD Ameritrade and Schwab. So again, it's just meant to be an advisory firm, not a custodian.
And what do you like now? Obviously, we've talked. We don't really care for cryptocurrency. And each portfolio is going to be different. Obviously, depends on the person's needs and how old they are, how much money they have, their objectives, etc.
Absolutely.
Is there any kind of magic type investment you like out there nowadays?
How about just make money? I've been astounded to look at some portfolios, and I look at the results over the last 5 years and see this is just pitiful. Yeah. These portfolios haven't done well at all. So here's the thing. This is actually an interesting time because of course, we've had this big, massive run, basically induced by government money to keep us out of the hole with COVID. And so stocks have had a good run. But I've been telling people as we go forward, you're going to find that it's going to become more challenging. We're in the middle of earnings season. God help any company that does not post reasonably good performance. Those stocks are going to get mauled badly. I mean, look at what happened to Facebook the other day. They had a power outage. Stock, boom, no questions asked, you get taken down. So we're in that world where if you're not continuing to perform well, it will be difficult. This time of year, usually November, December, January are typically good times in the market, but it's partly because holiday season is great and people expect to take off. Well, is Christmas going to be good this year if they don't have things in the stores? I don't know.
Amazon.
Well,
tell you what, Ken, we have to cut to a quick break. We're going to come back with some closing comments. So I definitely want you to continue. Stay with us. Best of Investing. We'll be right back. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with Nam Phan of Pacific Private Money and Ken Winans of Winans International. Ken, why don't you continue on with what you were mentioning?
Well, so the thing is, anybody who has money in stocks, whether it's a retirement plan, IRA, their own individual portfolio, I mean, you can make money, but I actually think two things. Number one, you're going to have to be very selective what you buy going forward. And number two, I love it when I hear people, actually, you'll love this. I have a new client, guy's in his 80s. His former advisor told him, well, you're in stocks for the long term. And he goes, I'm 81 years old. What's long-term to you? I mean, first off, anybody would be stupid enough to make a comment like that to a wealthy investor who's, by the way, a savvy business guy. Yeah. Dumb. The point is, the investment groups have aged, and nobody wants to go back and relive 2008, and yet it could happen. So I've told everybody, look, whatever strategy you use, whether it's growth investing, value investing, REITs, whatever you use, you have to have a defensive game plan. What is your strategy for taking profits? What is your strategy to mitigate tax effects of that? But you should have a strategy to take money off the table. You should. Real estate, at some point, look, if your house, if somebody's just giving you stupid money and you're getting ready to move, you know what? Maybe take some off the table. There's still tax exemptions there. I just think everybody should have a price in which they will play defense, knowing the prices will be lower. The other thing, a lot of people are eyeing retirement, and it's very standard. They begin to move money into income-producing portfolios, whether they're private loans, alternative investments like what Pacific Private Money offers, corporate bonds, muni bonds, whatever you may be buying. But people are afraid to do it now because they're worried about inflation, and they know bonds can get hit. Yep. So again, it's what kind of bonds. And so in my article, I talk about this. There are bond strategies where you can have those income-producing investments that won't get rocked in a high inflation scenario. And namely, it is move the maturities in. Don't lend money out for 20 years, lend it out for 5. And then as rates go up, you can reinvest it at higher levels. Also, ladder your maturities. Don't stick everything at one place. So the point being, Edward, that's what we're doing right now. We're having a lot of people that we're learning to navigate this inflationary world. And so far, knock on wood, it's been working. Last but not least, a lot of my clients are, like we talked earlier about, relocating. And I do know that the folks that have real estate, large California real estate holdings, are seriously looking at doing 1031s into tax-favored states while they still can. But maybe not the entire roll. They're going to move some of it into more liquid investments. So I do know for a fact these moves are being made by people to try to get ready for retirement and just to have more liquidity in their lives.
Interesting. That's great.
Good stuff.
That's good content.
Thank you. Well, hey, we all learn to spend. Oh, hey, last but not least, and I mentioned it earlier, commodities. Again, we have not had to think about having commodities in portfolios. The good news is you don't have to go out there and play commodity futures like in that movie Trading Places. You don't have to blow yourself up. One of the few times I do use products, there are exchange traded funds that do and are fairly liquid for agricultural commodities, metals. So I am encouraging people to say, look, if you agree with me on inflation, then you need to look at commodities as part of your portfolio going forward.
Are there any one specifics that specific commodities that you like?
Well, you know what? I actually think it's interesting on the gold thing. You know, the one thing that hasn't played out now is that gold and silver have actually been not doing well, because I actually think crypto has been robbing some of their thunder.
Yeah.
I actually think gold's undervalued right now relative to the inflation play. So maybe if people agree with me, maybe look at the ETF, the gold index, which is GLD, or the silver, which is SLV. I would also, I would tell people, you know, Telcrum has some ETFs in cocoa, corn, soybeans. But here's the point. If you really don't understand it, don't do it by yourself. Yeah. I mean, it's a good way to cause yourself self-inflicted wounds. You should work with somebody who really understands the growing seasons, that somebody knows the difference between summer wheat and winter wheat. You know, like I said, I spent 2 years in Chicago. I understand the game. And if you're going to try to figure it out on your own, good luck. I wish you well, but it probably won't go through.
All right. Hey, guys, we got to cut out. Here's our thoughts for the day. Bigfoot is sometimes confused with Sasquatch. Yeti never complains. And I would love to get paid to sleep. It would be my dream job. All right, tune in next week to The Best of Investing. We'll be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.